the luxury watch market is in a state of unease. We have seen the market for pre-owned luxury watches collapse, sounding like World War II bombs whistling to Earth. We have seen luxury watch brands lose money because of situations like the persisting COVID-19 pandemic in China. Folks, it has been a whirlwind year with some brands making money and some losing it, but generally the market has taken a hit. However, we the consumers need a flicker of hope this season, a sense of stability. But the question is, has the luxury watch market finally peaked? Well, let's find out. Let's talk about Eric Wind, a retailer of vintage watches who was recently interviewed by the Business of Fashion. Back at the beginning of this fall, Eric Wind was concerned about how business was going. His experience, together with that of others in the business, will provide us with further insight. So let's get down to business, shall we? The secondary market for watches has been experiencing a boom since the year 2020, with the most desirable models, such as the Rolex Daytona and the Patek Philippe Nautilus 5711, selling for 3 to 4 times their original prices this year. This is due to the fact that those models are in high demand. Despite this, September and October were slow months for Eric Wind's business as a result of dropping secondary market pricing, which slowed down life in general. It is interesting to note that Watch Charts, a website that tracks the value of luxury timepieces on the secondary market, shows that the overall market index has decreased by more than a quarter since it reached an all-time high in May 2022. Adam Cochran, an analyst at Deutsche Bank who specializes in retail and luxury goods, believes that declining prices on secondary markets may indicate decreasing demand on primary markets. Potential dangers include a drop in spending on luxuries, particularly in the United States, further restrictions on traveling outside of China as a result of COVID-19 virus, and the unpredictability of the global economy. As it turns out, inflation and uncertainty are currently an issue for every business. Despite this, businessmen have not surrendered their sense of optimism. The recent price decreases are said to be the result of a market correction rather than a permanent depression in the vintage timepieces industry, according to dealers of vintage timepieces. Do you think so too? Richemont's specialized watchmaking division experienced an increase in revenues that were 22% higher year over year in the first half of 22 as a direct result of the robust demand in the primary watch market. Among the companies that fall into this category are Piaget and IWC Schaffhausen. The Swatch Group, which owns Omega and Breguet, reported a 7% increase in sales when compared to the previous year. But that's not the end of it. According to Hodinkie's Chief Merchandising Officer Russell Kelly, the overall addressable market for luxury watches is huge, both new and pre-owned. As they say, we haven't even begun to scratch the surface yet. Now, back to Eric Wind. Stay with us. November was very good for sales for Wind. Sales began to pick up at a good pace. Now, here's the rather interesting thing. According to Tim Strake, co-CEO of Chrono24, one of the leading online marketplaces for new and pre-owned luxury watches, falling resale prices are a logical response to rising demand during a time of tremendous wealth building in 2020 and 2021. Trust us, we got lost here too. But to explain the unprecedented values in the IT and cryptocurrency sectors over the past year, Strake cited several variables, including an excess of cheap capital. The value of watches increased since many individuals began purchasing them. For instance, in 2017, Patek Philippe and Tiffany & Co. collaborated on the launch of a limited edition Nautilus 5711/1A018 model with a retail price of $52,635, the first piece of which sold at auction for $5.35 million. Buyers saw a chance to make 10 times or more on their investment by flooding the secondary market with offers on previously owned examples of the same model. Strake elaborated, "These folks had a love for timepieces, but they also have a love for business. So it kind of makes sense." More so in recent months, the resale market for sneakers has also declined. Furthermore, Wind, our vintage watch retailer for the day, has noticed a rise in interest and high-end timepieces over the previous few decades. The accessory's widespread use in mainstream culture has allowed the practice, which began before the pandemic, to spread to people of all socio-economic backgrounds. That's something you'll see all over hip-hop music videos and Instagram, Wind remarked. People's fascination with opulent lifestyles has increased demand for luxury timepieces. Nevertheless, altogether, the major market for watches still has much higher demand than supply. First-time customers, for instance, still have a very hard time walking away from a certified merchant with a brand new Rolex. Vintage markets still see the Nautilus and other hype models from Rolex, Patek and Audemars Piguet selling for 2 to 4 times their initial purchase prices. Strake pointed out that the Swatch Group's other brands like Omega and Cartier have not experienced a price drop. Second-hand retailers like Wind, Chrono24, Hodinkee and The Real have all stated that they do not anticipate a decline in overall sales despite the recent decline in resale pricing. You see, in the first 8 months of 2022, sales for Chrono24 increased by 42%. Hodinkee, which offers both new and previously owned artwork, generated $100 million in sales in 2017 and expects to increase those numbers this year. Again, according to Wind, the interest in watches has skyrocketed in the past few years. His best estimate is that millions more individuals are interested in watches today than they were 3 years ago. But what should luxury watch brands do with this information? Luxury watchmakers, despite seeing increased demand, should proceed with care in the coming months due to economic uncertainty. Finally, according to Bernstein analyst Luca Solca, the sector is not immune to economic downturns. Secondary market prices are currently higher than retail prices, indicating that primary market demand is currently exceeding supply. As a result, manufacturers and retailers can raise both prices and output in response to rising consumer demand. The latter has been a challenge for the watch industry because creating high-end timepieces is labor and cost intensive. Last November, in a very unusual public declaration, Rolex stated that it was not deliberately restricting availability. "The shortage of our products is not a strategy on our part," the private company said. "Our current production cannot fully meet the existing demand, at least not without reducing the quality of our watches, something we reject as the quality of our products must never be compromised." Many companies, however, are making efforts to expand production. The Federation of the Swiss Watch Industry reports in the first half of 2022, the Swiss watch industry exported timepieces with a total value of 11.9 billion Swiss francs, equaling $12.4 billion, an increase of 8% from the same period in 2021. Pricing increases, though, have been common during the past few years. What's more, Cochrane of Deutsche Bank cautions against blindly adopting either strategy. Price drops in the market may signal there is less room for additional price increases than we anticipated a year ago, Cochrane said in an email. It would be unfortunate if retail selling prices of high-end watches were to decline, since consumers took to high-end timepieces as a store of value and even as a hedge against inflation. In the same breath, he said, controlling supply is the important issue for brands to guarantee it is not far ahead, especially for entry-level luxury timepieces that are more approachable to all kinds of consumers. Although current consumer sentiment toward purchasing a watch is weaker than in recent months, the market is ultimately cyclical, as Solca pointed out. Much of the market's froth has evaporated, he said, now that cryptocurrencies have come back down to earth. Iconic products are still in short supply and fetch a high price on the secondary market. Even during a worldwide economic downturn, a dip in resale values may not register as more than a blip. Now, Mark Cho, co-owner and co-founder of menswear companies Drake's and The Armory, and an avid watch collector, said, "The bubble has burst, but I don't think it's a big deal. People had a lot of FOMO, which, by the way, means the fear of missing out in recent years. The mindset has been, if I don't buy this now, someone else will. Today, that FOMO has greatly reduced." With all of this information, we ask you as a consumer, are you less anxious?